Hi everyone. Before I start this video, make sure that you join my Discord server. The link is given in the description box below. Okay, so for this video, we'll be going over A-Level Accounting 2023, October-November, Paper 2-3, question number 2. This is a paper 2 which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit given for this paper is 1 hour and 45 minutes. Since question number 2 is of 15 marks, ideally you should be spending about 17.5 minutes in order to solve this question. And in this video as well, we'll be attempting to solve this question under 17.5 minutes. So without any further delay, let's get started. Alex owns a business selling computer equipment. He provided the following information for the year ended 31st July 2023. Opening inventory at 1st August 2022 was 19,100. Gross profit for the year ended 31st July 2023 was 56,380. Cash sales were 36,870. All other sales were made on credit. All sales were made to achieve a gross margin of 25%. So gross margin of 25% just means that gross profit should be 25% of sales. And since in this case we are only given cash sales, let's figure out the total value of sales. We have the gross profit of 56,380. This will be equal to 25% times sales, which means that our sales value will be 56,380 divided by 25%, which results in the value of 225,520. That's our total sales. Now let's calculate the credit sales. Since we are already given cash sales, the excess of this value from our total sales is going to be credit sales. So that will be 225,520 minus our cash sales of 36,870, which results in the value of 188,650. That's our credit sales. Then all purchases were made on credit. Inventory turnover was 8 times per annum. Trade receivables at 31st July 2023 were 23,150 and trade payables at 31st July 2023 were 17,370. We need to calculate the trade receivables turnover in days for the year ended 31st July 2023. We need to state the formula used. Formula is very simple. It is just trade receivables divided by credit sales times 365. Now we need to show the calculation, and in this case you also need to show the calculation for your credit sales within that section, because credit sales is required in order to calculate the trade receivables turnover days. Now the value for trade receivables given is 23,150. We need to divide it by our credit sales, which we calculated to be 188,650. Then we need to multiply it by 365 days. This gives the value of 44.79. Since we're talking about days, we always need to round it up. So that is just going to be 45 days. Now for the second part, we need to state the formula used to calculate the rate of inventory turnover in times. Again, this is very simple as well. We just divide the cost of sales by our average inventory. Okay. Now we need to calculate the closing inventory at 31st July 2023. We have been given the hint itself, so we need to utilize this formula in order to calculate the closing inventory. Okay, so the inventory turnover is 8 times per annum, and we also have the gross margin of 25%. So if 25% of sales is the gross margin, the remaining 75% of sales will be the cost of sales. Since now we already have the value of our total sales, we can calculate our cost of sales as well. That will be 75% times our total sales of 225,520. This results in the value of 169,140. Okay, let's include this value and calculate our average inventory. So cost of sales by average inventory is given to be 8. That is the rate of inventory turnover, right? The cost of sales, we just calculated it to be 169,140 divided by average inventory will be equal to 8, which means that our average inventory will be 169,140 divided by 8, and this gives the value of average inventory to be 21,142.5. Now we implement the formula for average inventory. That is just the opening inventory plus closing inventory divided by 2. And we know that our average inventory is 21,142.5. We are given the value for the opening inventory to be 19,100 plus closing inventory divided by 2. So we can move this 2 to the other side. That will go as part of the product. Then we need to move this 19,100 to the other side as well. So our closing inventory will be 21,142.5 times 2 minus 19,100, which results in the value of 23,185. That's our closing inventory value. Now for the third part, we need to calculate the trade payables turnover in days for the year ended 31st July 2023. So the formula is similar to that of trade receivables turnover. We start with the trade payables. Then we divide it by our credit purchases. And then we multiply it by 365. Okay, so trade payables is given within our question to be 17,370, and we were told that all purchases were made on credit. Okay, so 17,370. Now for the credit purchases, we need to utilize the formula of our cost of sales. Remember that cost of sales is just opening inventory plus purchases minus closing inventory. In this case, the total purchases is made on credit. And the cost of sales, we calculated it to be 169,140. The opening inventory was given to be 19,100. We're trying to calculate the purchases. The closing inventory, we figured it out to be 23,185. So our purchases or the credit purchases is just going to be 169,140 minus 19,100 plus 23,185, which results in the value of 173,225. So that will be 173,225 times 365. And this results in the value of 36.60. Again, we're talking about days, so we need to round it up. That will be 37 days. Okay. Now we're given additional information. Alex understands that by comparing his business's financial results with those of various other businesses, he will learn how successful his own business is. Now we need to advise Alex whether his understanding is correct. Okay, this is of 5 marks, so we need to write down at least 4 points and give a final decision. The very first thing that we can write down is that the comparison is not always valid because different businesses might use different accounting methods. So different businesses might use different accounting methods which will invalidate the comparison. Similarly, what Alex needs to understand is that the financial statements only take account of monetary data, while it ignores non-monetary factors such as our staff morale or the skill of the staffs or location of the businesses and such factors. So the financial statements only take account of monetary data and ignores the non-financial factors such as staff morale, staff's skills, location of the business, and such. Okay, now we need to make a decision. So the decision is that Alex is correct in his understanding, but he also needs to understand that the valid comparison will only take place if the businesses are of similar size and in the same business sector. Let's write it down. Alex is correct in his understandings, but he also needs to understand that such comparisons will be valid only for businesses of similar size in the same business sector. That's all for this question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.